Welcome to this session on the economic impact of the COVID-19 outbreak. COVID-19 has been one of the three black swan events of this century. The first one being the 9/11, the second one was the credit crisis of 2007 to 2009, and the third one is this COVID-19 outbreak. So all these three events in many ways have been black swan events, and nobody in many ways have been able to predict any of these. But maybe I'll correct myself. The second one, which is the credit crisis, in some ways was predicted by a lot of folks, or at least, people were warning about something like this could happen. Raghuram Rajan was one of them. But this is absolutely unique, and so was 9/11. So to talk us through the economic impact of COVID-19, we have an awesome individual with us today, which is Dr. Paul Alapat. So Dr. Paul Alapat had worked with Nomura and was also with Moody's. And he also teaches financial economics at IIM Bangalore as a guest professor. So we are very happy to have Paul share his views with us today. So Paul, welcome to this session on the economic impact of COVID-19. Lovely having you here. Deeply, deeply grateful for your time and taking time out on a Saturday to talk to us. But frankly, Saturday is like any other day now that all of us are at home. We hardly can recognize what's a Saturday or a Sunday.
That's true.
So, great.
Thank you very much for having me, Hari. I'm honored and look forward to sharing my thoughts. I mean, don't claim any expertise, only that I've lived through some of these black swan events.
Lovely. I'm sure you can draw a lot of parallels based on your experience, Paul. So Let's get into it right away. So let me just set a context quickly. So most of the viewers, are not necessarily going to be economists or may not understand economics deeply. So would love it if you could simplify, if you could keep it interesting, if you could draw a lot of analogies from a world that people can relate to. So that will be very good. And keep it simple, I would say.
Absolutely, we'll do that. I'll try and draw as many analogies to the human body because
great
medical crisis.
Yeah. So let me just start right away, Paul. So it's being said that the world economy has already begun contracting and we are in the midst of a recession. Sometimes we don't really understand what this contraction of the economy or a recession means. Because, if the economy degrows by just 1%, apparently it seems to be a very bad phenomenon. Economists say that it's a very dangerous sign. But a 1% degrowth, for example, does not seem to be much for a layman. A 1% fall in income would not impact anyone's lives. So can you just deconstruct this for our viewers? What does this really mean for us?
Thank you, Hari. So I think basically there are two sides. Let's say there's a supply side, there's a demand side. This was very clearly a supply shock. Suddenly production stopped because physically people couldn't get to office, supply chains broke, etc. So that is the genesis of this economic deceleration that we see. And you make a good point about growth. I think it's better to talk in terms of deceleration because it's the rate of change. So any abrupt deceleration means there are consequences for jobs, for investment planning, etc. So what China witnessed, and the first production numbers we've out of China are scary, 13.5% contraction for February. These are numbers we have not seen historically. Consumer confidence numbers out of Europe. So all of this suggests that yes, the global economy has already started a supply shock induced deceleration. When we compare it year on year over, we are most probably looking at maybe double digit levels of reduction. So yeah, I think that is the initial emphasis. Too early to put any numbers, but there's a very sharp supply side led shock. Now the question is when it gets transmitted to the demand side.
Yeah. So how do you think it'll get transmitted to the demand side and which in turn will feed the supply side? So it becomes a vicious cycle. You see this becoming a vicious cycle and therefore in some ways spinning out of control?
So I think, Hari, the biggest problem about this, in some ways, just to keep in perspective, this is a respiratory illness for which we are. This is a seasonal flu. This is not a pandemic. I mean, this is not a bubonic plague or anything. But nevertheless, the is duration. Are we talking about 1 month? Is it 2 months, 3 months, 4 months, etc.? So I think the policy responses are critical, especially in poorer countries like India, where I will say what the other complications are. Because what you're going to see is supply shocks. So production stops. If this continues, you have liquidity problems. Then if it gets extended, insolvency problems. Then workers get poorer countries. There is no paid sick leave. There is exploitation and starvation risk. So there is a social unrest threat. So we have a medical problem, which leads to a supply problem, which then gets transmitted to a demand problem because jobs are lost. People have no money in their pockets. So demand gets contracted.
Yeah.
Small, medium businesses, agricultural industries, unorganized sector could close down. So the longer this goes out and the weaker the policy response multiplies, then the demand weakness then creates to further cycle, which then comes back, fewer investments are made, so less supply, and then this just goes on. Then also there's the issue of from the manufacturing sector to the services sector. The services sector really decimated.
Got it. So, Paul, this is a medical issue and there does not seem to be a consensus on how this pandemic is going to evolve and the nature of impact, the quantum of impact. But let's just come back to that in a moment. In the meanwhile, could you just draw some parallels with the two other black swan events of the century, like, 9/11 and the recession of 2008? I think you've been through both of this, and I think you've experienced the recession of 2008, the credit crisis, in a first-hand manner, and if you've had a ringside view on how it evolved. Can you just draw some parallels from those events, and can you talk about what potential impact this crisis could have?
Absolutely. So both of these have intimately affected my working career. I mean, I was with companies both when the Y2K and then of course 2008, the subprime crisis, etc. happened. And the big difference, of course, is like both of those were asset bubbles bursting. So they were overvaluation of assets, which was mispriced, and that it was an economic genesis. This one is a medical genesis, which because of uncertainty, it can spill over. But just before...
Just tell me, Paul, for a moment. So 2008 clearly was an asset bubble, but what about 9/11? Wasn't it a supply shock what's happening now?
Yeah, I was actually referring more to the thing, but there was initially the whole internet bubble build up, and there was a of loss-making entities. Then, of course, you had a terrorist shock, at which time there was a lot of mispriced assets which were vulnerable. Both of these, particularly the 2008, 2009, had huge impact on the financial system. So it's almost your blood supply. Anything happens to the or something related to the financial banking system will affect the rest of the body. Yeah. We still haven't gone to the heart and the blood supply. Yeah. Countries like the US, which are well capitalized, it's almost like some parts of the world have come out of a crisis and they have antibodies because of the capitalization, how they treated the 2008, 2009. So those, particularly the US is much better position, whereas Europe and India, our banking systems are very weak going into this. So a bit like coronavirus, it will hurt the ones who are the least healthy the most. So Europe,
very interesting.
India, these going to this crisis very vulnerable. Investment was weak, credit growth was weak, job growth was weak. So we were not well prepared for this. Europe was not well prepared for this. Both these, if not quickly managed, effectively managed, could have ramifications longer than other parts of the world.
Right. Great. So coming back to a little bit about, what's been happening in the stock markets.
Sorry, just before that, before that, I just want to, because you're drawing historical parallels, I also want to, there are three things that we also need to keep in mind. Compared to even just 10 years ago, the globalization is much different. We are much more interconnected. That's why a single shock in one country has been transmitted so rapidly. Second, China. China is about 16% of GDP, almost 4 times what it was 10, 20 years ago. So the third is digital, the digital world. Because of the digital world, we are able to continue businesses which are online. But because of the world, the information spread is dramatic. So part of the crisis, I believe, is a social media construct the psychological worries are being multiplied because of the digital media. So digital media has been both a blessing and a curse. So just these three things we need to remember. It's very different from 10 years ago. Sorry.
Right, absolutely, absolutely. And I think it's a lovely point you're making, which is that as the global economy begins to interconnect and we become one major global economy, events like these tend to have a huge domino effect. In fact, in 2008-9, I think India to some extent was protected or insulated for the simple reason that we had not gone into full capital account convertibility and we had not integrated fully, I'm assuming. Is that right?
Oh, absolutely. I think on the financial side, we have much more capital integration. Equally on the manufacturing side, we have so many auto manufacturing plants now with supply chains which now connect us to China and other parts of Southeast Asia. So as an economy, we are much more open, but nowhere on the scale of our Southeast Asian neighbors or China, which is to some extent a certain amount of insulation.
So just switching gears for a moment, Paul, the stock markets worldwide have pretty much gone into a tailspin, almost 35 to 40% drop in 30 days. I remember in 2008, a similar drop of 40% happened over a much extended period. I think it was about 4 to 5 months. So is there something which indicates that this time around things could be worse?
Hari, it's yes, but it's a difficult question because it's more about, in terms of depth, actually 2008, from the peak to the bottom in the US was about 59%. So
wow.
This time we have just hit about 30% and subsequent corrections, but we are clearly in bear market territory. Now, the general consensus is that it will be deep, but short. So it's a very deep V shape that everybody unanimously pricing in. So almost people are looking beyond the bottom and saying that we cannot time the recovery. So we might as well position for it. So I think that partly explains why the reaction has been so quick. And the next point I would say is because this is a globalized world, any part of the world we find out, it will be transmitted immediately. So just like we went into this quickly, we will come out of this also quite quickly because
that's true.
Yeah, knowledge, information, diagnosis, everything is being instantaneously disseminated.
And let me just ask you a question about, this lockdown and the whole world, I think, has gone into a lockdown, and this is the biggest lockdown in the history of humanity. So if this continues until 30th of April, and there are predictions that it could go for much longer, but assuming that the complete lockdown extends till end of April, what are the implications on jobs, companies which rely on people congregating, the entire sharing economy, investments that, a SoftBank has made, which is in a co-working space like WeWork, Oyo, the entire sharing economy of the taxi aggregation businesses like Uber, Ola, and Didi in China. So if it goes on till end of April, what do you see happening to the economy, jobs, and the shared economy in particular?
Right. And that's a good question. See, if it is only a week, 2 weeks more, once April 14th comes, everything is 14, I think we are all mostly okay. The ones who are suffering the most right now are the migrant workers, construction, who are stuck at railway stations because they have nowhere to go. The poor are the most vulnerable. There's no option of distancing. Everybody lives in cramped quarters. So they don't have medical care. So at this point, I think the poor are the ones most vulnerable. As this extends, a lot of the daily wage laborers, construction work is already stopped. Next, you'll have certain smaller companies cutting staff to preserve liquidity. So the longer this gets going, this then gets to the medium enterprises. This starts spreading. The government has announced in India that you can take a moratorium on repayments. That means you can wait.
Right.
But it doesn't go away. The debt just accumulates. So it is not that the government is buying out or cancelling the debt. It is still there on the bank balance. So the weakness is being shifted from borrowers to your credit cards can be delayed to the banks. The banks, a lot of them are not in a position to bear this. So if this further and further, the banking system gets even more weak. NBFCs are already struggling. So your credit system, the blood supply starts getting impacted. So as you go further and further, there are these economic consequences. Then after that, investment plans, a lot of them are being recast because nobody knows consumer confidence will come back. Spending is just crashing. There is so the whole thing is that while this medical crisis can get over very quickly, the economic and financial consequences could be with us for more than a year.
I think you made a very interesting point, analogy between, an individual and a country. You mentioned that COVID-19 would hit weaker individuals, people with immunity problems, the aged, much more than the younger lot. And similarly, it would impact countries with fragile, banking systems, fragile, capital markets versus the countries which are much stronger. Can you just elaborate on that a little bit?
I think the best way to look at countries are like, okay, you have brain, you have your heart, you have your blood supply, etc. And then you have, you're exposed to different weaknesses, acid bubbles bursting, and how they have been medicated, how they have been diagnosed in time. What have the policy responses been? Have they been muscular enough? To the US's credit, invariably, if you look at countries which have been the most proactive and the most brutal sometimes to weaknesses and illnesses in the economy, has been the US. They cut down industries, they sort of shut down, then the economy takes some time, lays off people, and then reopens again. So when the next bout of illness hits, they are much better positioned. Classic system is the banking system. Unfortunately, in India, we have just gone through this whole thing about infrastructure-related credit problems, and we haven't had enough time to recapitalize. To compound that, started decelerating, investment spending, etc., weakened. So the whole economy was in a fairly weak situation. Fortunately for us, oil prices have been relatively low. That is the saving grace which has sort of kept going. But right now, with record low oil prices, we are not getting the terms of trade benefit. We are not getting any purchasing power. So our inherent weakness of the whole body, the Indian economy, is considerable. We didn't have the additional complication is social stability. In times of this, there are economic issues which, yes, we have time about. Social issues, you don't have time. And they can explode in a country as large and diverse at any time. So I think it's important that the social issues are first stabilized very, very quickly. That means directed subsidies, which actually, once you have that stabilized, parallelly you start bailing out, closing some weak sectors, bailing out sectors. So what I'm saying is, in India, the social, because of social issues and poverty, we have much more social unrest threat than, let's say, Europe.
Yes.
While the economic challenges in Europe and India may be similar, we have an additional dimension. So the government fight on several fronts: the medical front, social stability, and economic stimulus. So, and I think between all of that, the medical and the social stability are more important, at least in terms of sequence.
If you talk of companies, some companies have been, I won't talk of specific companies, but some industries, I think, have been hit very badly, even public companies. So, for example, companies that relied on customers walking into stores for doing business. So a lot of these companies have seen revenues come off in a big way while their cost structures remain what they were, which means that, and especially those companies have taken loans, and if they have a big loan outstanding on their balance sheets, they might begin to default on interest payments. So, and which in turn will have a cascading effect. Do you begin to see some of that happening soon?
I think that's where government response is critical. What RBI has announced right now is like basically delaying your debt repayment. So you can just delay, but it's not forgiven. The next step is, should we now start forgiving some of that? And just then the next issue is, who bears that? Will it be or the government? In crisis, it invariably, if it's an insolvency problem, you have to be very careful, because if they are not sustainable, then you have to close some of them. Very sensitive. If it's an illiquidity problem, then you bail them out. So this is the basic. Illiquidity, bail generously. Insolvency, very selectively. So I think, yes, there is a very serious this thing that some of these companies may get, if it is long, the small, medium, the ones with deeper balance sheets have a little more flexibility.
Yeah.
In general, I think comfort is at the bigger companies because the duration is expected to be maybe 3 months, 4 months, looking at China.
Yeah.
Be able to withstand it and rebuild and capture market share because there will be a consolidation of market participants invariably.
Correct. That's true. Correct. So the stronger players therefore can capitalize once things recover. Yeah.
True. But I would also draw one parallel about the digital and non-digital companies. What our experience, at least my personal experience yesterday, we were trying to order dinner. We tried 3 different online things. One worked. Yeah. So it is not just your digital infrastructure, the non-digital infrastructure, how well it's
Yes.
is the biggest challenge.
Correct.
In our own company, we have transferred almost all our employees home. The biggest challenge, shifting laptops from the office to the house, the driver, messenger. So that is what is critical. We sometimes overlook that we still have to be grounded with that. So I think not all digital companies are going to come out of this as well.
In terms of, the best case, worst case scenarios, what are some predictions? Would you like to crystal ball gaze a little bit in terms of what's the best case and the worst case scenario possible?
Oh, totally. In terms of, in terms of issues, but not in terms of timing, how long we don't. Best cases, we find a vaccine very quickly that is effective. It's a lot of confidence. So confidence comes back rapidly. Even before we know it, we have built up herd immunity. There is a lot of information that many people have mild infection, which it's like a cold, etc. And we actually build herd immunity of a critical mass. So we then can withstand any relapses.
And what's this herd immunity? I've been hearing this term, never understood what it meant.
So basically this model of infection is that as you start these kind of contagious infections, it depends on how many people are unaffected because everybody who was affected and recovered have built up resistance to it, antibodies and whatever else. And so they will not get infected again. So as more people get infected, the general number they say is about when 60% of the population gets infected, the proportion that is left to get infected starts dropping off. So that's typically when you see a peak. And once you hit about 60-70%, the whole contagion starts getting killed because there aren't enough unaffected people to pass this on. Now in India, 60% is a large number and collateral damage is the unhealthy and the weak. So this was a strategy that the UK deliberately tried to follow, but there was strong criticism from WHO, etc. And now they have stopped. Now they've also gone into lockdown. Because, so it cannot be a deliberate strategy. If we are lucky, best case, then it has happened and we are all with some immunity. That's for India, the best case would be if it is related to weather. So that temperature actually resists the spread. And there is some evidence like Indonesia, India, tropical countries haven't shown the spread like Switzerland and other smaller temperate countries. So that would be great news for Indian businesses going forward. Worst case scenario, absolutely. See, people, the poor, unemployed, unorganized, every part in the world, social stability, and more so in India, all these get multiplied. I think that is the social fabric is my biggest worry because everything else through money and appropriate policy, we can correct it. And doctors, I think medical professionals, quite a few are getting infected. And if we don't manage that, then we just lose this whole battle against it, right? So I think that is that extreme scenario.
And coming to the investment climate and the climate in startups particularly, how do you see VCs viewing this? Would they, would it be a wait and watch approach? Would startups that have got Series A funding struggle to make it to Series B? Will seed stage startups struggle to make it to Series A? How do you see this entire investment climate with specific, relation to the startup industry? How do you see that?
So I think, Hari, the first thing is that because this is a black swan event, a very probability but high damage event, we cannot extrapolate. So once we pass this, nobody needs to suffer from this again.
Yeah.
This will reveal existing companies, existing startups, is your flexibility, your decision making, your resilience, your cash flow. So those are the things that will be tested for existing ones. The ones that are planning to launch, funding will be difficult. Nobody's going to jump out. See, what is the biggest uncertainty we fear right now? How long?
What's that?
How long? Is it 2 weeks away? Is it 3 months away? Is it 6 months away?
Yeah.
So I think under the circumstances, people will be very careful. But the positive is that as an investor, my general outlook is that as long as I preserve my liquidity, there's a great opportunity ahead of us, because this is not permanent. This is at best temporary. So by definition, that is what investors want. So I think VCs will not totally shut off, but they will be discriminating. But at the same time, I think there are great ideas that are coming up in terms of there is an opportunity. How do you now address certain gaps in our structure, in the economy, in getting medicines across, getting big challenge, looking after the aged when a lot of the children live overseas. And I'm sure there are a lot of companies which are, so I think equally there will be other opportunities.
And Paul, what would be your advice to startups, to manage during these times? What should they be careful about? Should they, cut costs? Should they be more frugal? What do you think they should be doing? What would your advice be?
And that is a difficult question. See, if you agree that this is a temporary, then I think preserving loyalty, both of clients and of your employees, is paramount. So my preferred approach is always, let's take a salary cut if needed. But let's keep everybody employed. Please remember, I mean, you let people off. Finding a job in this environment is difficult. So I think if nothing else, out of compassion, and I think that is the right thing to do, because loyalty and trust is what we need if it is a temporary cycle. If it is a permanent, a much longer, 6 months, 10 months, 12 months, that's a different issue. Then of course, salary cuts alone won't do. You'll have to partially start laying off the less critical staff, etc. But those are very, very difficult. So I think at this point, I think salary cuts, delay investments, absolutely spending. The biggest saving for our company has been travel. There is zero travel. There is almost all conferences are video conference, and people are getting used to it. And
maybe you figure out that a lot of travel wasn't really necessary in the first place, I think.
Actually, that's a thought I've been having, but at the same time, I appreciate that face-to-face contact matters. Why do we need to go to office? We can all work remotely, as we have now established. I think there are reasons of, there is team spirit, there is discipline. See, what is the biggest challenge today? A lot of it is on how do I monitor? If somebody says they work 9 hours, 10 hours, So I think there's an opportunity for some sort of regulatory monitoring service, because apart from anything else, I think what has inhibited remote service is that how do you monitor and not break any regulatory rules. So, but yeah, I think, there will be, sort of difficulties, but yeah, general advice, I think broadly, I think there will be challenges in funding. And I think at this point, liquidity is king. It is going to get, banks are going to be in.
So cash is king.
Increasingly so, because I think credit will become extremely difficult. I think the banking system, especially in parts of the world, including India, did not go into this in a very healthy state.
True. So Paul, just switching gears a little bit, we are reaching the end of the session. What would be your advice to the governments across the board, and particularly in India, what would be your advice? What should they be doing? What shouldn't they be doing? What should they be watchful about?
That's a good question. I think starting at a very big level, you have monetary policy, you have fiscal policy, and then you have directed subsidies. In terms of priorities, right now, medical infrastructure, we have to make sure that there is enough ventilators, masks, etc., for health professionals. So all that is clearly first priority. Simultaneously, social stability. So you have to have directed subsidies which have to reach the affected people. and ensure that a lot of these migrant labor actually reach their homes. A lot of them are stuck in stations because everything is shut. So parallelly, fiscal stimulus. See, we have to absolutely create demand again. And this could be public works, etc. Once social distancing, etc. is relaxed, we have to start infrastructure projects on a war footing. We have to start public housing, whatever, because at this point, there is no confidence. Investors are not going to rush out. So you will have to have non-market price related initiatives. And collaboration. I mean, we actually, in the best case, worst case, the one thing I forgot to mention is we have to be very careful that the world does not become protectionist. We have to trade open. We have to allow free flow of goods, services, and people. My biggest worry is that there will be a backlash against immigration. Countries and people will now say that it is safer to keep foreigners out. So a lot of that is what I worry about. So I think governments have to deliberately keep an open mind, open borders, and not regress. We cannot afford to lose the progress we made. So I think you have that global multilateral this thing, because see, one of the things about this incident, partly because the digital world is, it is almost a daily beauty parade. You get ranking of how many countries are doing well, how many are doing badly. So there's a lot of beggar my neighbor, let me do well, let me look good, let me show less infection. So there is a lot of jingoism, and better word, we're getting more insular. So I think countries and leaders have to deliberately resist a lot of this, I think, regressive urges, and not pander to nationalism. So I think these are all, I think, challenges. And then, of course, the right tax breaks. We will need debt forgiveness. We will need active bailouts. And the good thing is that we can follow whichever country is doing it best. You don't have to come out with yourself. So I think there are some countries like Singapore where there's a lot of credit being given. Let's see what they're doing and scale it up.
Last question, Paul. So do you see any lasting changes to the way we do business, to the way we work, to the way we travel, the way we look at entertainment? Any concluding comments on some of the lasting changes that you see in society?
Hari, I've given some thought to this, and I thought yes, but then actually I just remembered, let's say 9/11. That time there will be no premium for top floors. Everybody will want to take offices in the bottom floors, etc. Guess what? The tallest building has replaced the World Trade Center. People said, I mean, tall buildings will not be there. Sorry. Still have cities, because the density of population, the benefits of that outweigh the negatives. So certain things like commuting. I mean, like we now realize we can pitch and market a lot more remotely than actually taking a flight and going. Education. I was just talking to a professor. He teaches at IMA, and he says now online classes are actually as effective and so much more convenient. So we might have more online education. So I think selectively, yes, but by and large, this is a black swan event, because you cannot extrapolate from a black swan event. I don't think you will have a permanent thing. What will change is if there is a financial incentive which sort of reinforces it. So like shared workspaces, you still need it. It will come back, but with adequate protection. So my general thing is that I think a lot of things I think will not change, because we are still going digital trend will continue. Remote working will increase. There are certain gaps. We will try and fill those gaps, and for that, opportunities will arise. Travel, it will come back. Hospitality industry will come back, and I think we take more precautions maybe. But no, actually no. This event is difficult, but it is not permanent, and the probability of such events are low. And I'm sure by next time we will have a vaccine. So the next incident, I think populations will be much better prepared. So short answer, I think people have to be very careful, because extrapolating, you could lose money, because I don't believe that some of these trends are justified in extrapolating out.
Lovely, Paul. It was lovely. Thank you so much. The insights were amazing. I'm sure our viewers would love it. Really appreciate you taking the time to come and talk to us, Paul. Thank you so much.